Hi, good morning, everyone. It is just me today in the stream. Nick and Celine are out. So, if you've joined London Stream with me before, you'll know that I only trade gold. So, today is going to be a gold session. We're going to go through, I'm going to give you guys a lot of education around how I do top down analysis, how I find a directional bias. And then, of course, we're going to be looking for some entries around London Open, which has just happened. So, Roman, if you could pull up the charts, and I'll start talking through gold. Okay, so I've deleted all my drawings on gold. I'm going to draw up from scratch, show you guys how I do top down, but just a heads up. So I am going to be marking up XAU USD. So obviously, as you guys know, on the future side, gold is MGC if you're trading micro, or GC if you're trading just mini gold. However, I'm coming from CFD, so I've been trading XAU for 7 years, and I have noticed a bit of a lag on TradingView on the future side. So I'm going to be marking up XAU. Price action is exactly the same. The only difference is price levels. So let me here. So for example, it'll say on the future side that price is hit into 4,500, but on XAU, it's maybe like 20, 30 points off. So ignore the prices on the right-hand side here as I mark this up, and just focus on price action. So I don't use any indicators. I just use opens, levels, liquidity, and price action itself. So before I get stuck into this breakdown, does anybody have any questions regarding technical analysis, regarding gold? And then I can make sure that I cover that in this breakdown. So if you can just pop in the chat any questions you guys have. Okay, Jesse James says, Claudia, are you liking the shorts on gold? Yes, I am. However, let me share this different screen and marked up charts. I was waiting for price to take out the monthly open this high to get in on a sell up here. So I did miss this initial sell. I got in down here somewhere, so it's bittersweet. I do like the drop here, but I didn't get in quite where I wanted to. So do you use ICT? Says Praj Walcott. No, I've never studied ICT, but I imagine some of the concepts are similar. I've noticed from many different trading educators or traders online that a lot of people will call the same thing by a different name. So you might not have heard of a concept before by name, but once you learn about it, you'll realize you might have used it or you've learned about it somewhere else. So I imagine some of the concepts are similar. Movie Clip said, how do you identify the key levels before taking trades? So what I like to do is I like to mark up quarter levels. I find that for gold, these are really, really good levels to look for trades from, and to also the opens as well. So I'm going to mark that up. Like I said, do you know what? Actually, I'll pull up futures. We'll do it here so that you guys have, so that you can apply it to your futures charts. Okay, I'll just get stuck into it. So the first thing I do is, if you've got a brand new clean chart on gold, is I'll grab the horizontal line and I'll start marking up quarter levels. So I like to make these green just so they stand out a bit. And what I mean by quarter level is every 25 points. So that would be, where are we at? 4494. So 4475. And then I'll just lock that. And then I'll actually start with 4,000. So 4,000, 4,025, 4,050, etc., etc. So it is actually that was on a higher time frame. 4,400. 4,425. So it's every 25 points I like plotting these green lines on. So I'm going to go back to my marked up chart and show you why I use these levels, because you're going to see how much price actually plays and reacts off them. So yeah, that's the first thing I'll do, is I'll plot out every 25 points. Let me just pull over. Oh, sorry, I was on the wrong chart. Yeah. Okay, so that's what I was just doing there. I shared the wrong screen. So yeah, grabbing the horizontal line here and then just marking up every 25 points. So 4, 5, 2, 5. Yeah, so as you can see here, every 25 points. So I refer to them as quarter levels, and then levels that end in 00 I refer to as whole levels. So every 100 points. Now, let me just pull up my marked up chart again, and you'll see how price reacts to these levels non-stop, really. It'll see here how price pushed above this quarter level 4475. It wicked down, right? Tapped into that level here. I'll just zoom in so you can see it better. Beautifully shot up to this quarter level, came back down to this quarter level. You see the way it just bounces between the green lines? Here, for example, bounced up from 4,500, tapped into 4,575, and then dropped. And then even when price drops aggressively, you can see these reactions, how price slows down at levels, then pushes to the next one. Here, for example, shoots right through, comes back up, reacts off this quarter level, pushes down to this one, right? They really are magnets for price action. And also the opens. So we have here the weekly and the monthly open. So this was the open for Monday this week. Because we're into a new month, it's also the 1st of June. So really, really good levels for liquidity when you have the 1st of a month being a Monday, because that means that the weekly and the monthly open are the same, but also the daily open for that day too. So on Monday, I had this labeled daily, weekly, and monthly open, right? And that's why you've seen this really nice push back to this area. Do you see how price wicked right into this purple line here, which would have been the previous day's daily open, the weekly open, and the monthly open, right? So there was a ton of liquidity in there. Price tapped into that open, grabbed that liquidity, and then a shot to the downside, taking out this previous low. So yeah, that's how I mark up levels with regards to opens and price levels. The other way that I map out levels that I want to look at for potential entry areas or TPs is supply and demand zones. You probably know it as support and resistance. Like I mentioned at the start of the stream, it's the exact same thing. It's just a different name. So same concept, just different title. So I like to grab go to the higher time frames and try to identify order blocks, essentially. So areas where there's a burst of selling pressure or buying pressure. If this would load, let me just refresh. So with order blocks or supply and demand zones, what I'm essentially looking for is, so here, this one I have drawn up, for example, I'm looking, I think I drew that on the 1 hour maybe, yeah. So here we can see price wicked this previous day's high. It took out the previous day's New York Open. This was on Tuesday, the 19th of May, right? And then you've seen this strong push to the downside. Now, the reason why this stuck out to me, even though it just broke a previous high, which should tell you that buying pressure is stronger than selling, the reason I've identified this as a potential turnaround is because of this 1 hour bearish engulfing candle. Right, so do you see the way this 1 hour candle here swallows the bullish one? That means that selling pressure is now stronger than buying pressure. And that is why I've marked that up as an order block, because that's telling me that price looks like it's turned around from there, right? Now, I don't enter straight away whenever I see an order block print in or an engulfing candle print in. I wait for price to come back to that area. So that's why I map these zones out. And that's another level that I look at for potential entry or TP. So do you see the way price came back into this area and then react off it really beautifully and then drop to the downside, a couple of 100 points, 200 points, right? So yeah, 2 seconds. Let me just close tabs. Is that a bit better? The lag? Okay. Yeah. Okay, cool. I'll speak a bit slower as well. Okay, so just in case you guys missed that, if I was lagging, so this is the zone I was pointing out. You can see how prices came back into that area, tapped into that zone. It came into that order block a couple of times there, so there was a couple of different opportunities to get in on a sale there, and then price dropped. So yeah, quarter levels every 25 points, whole levels every 100 points, and then supply and demand zones or support and resistance drawn in the form of order blocks. I'm primarily looking for engulfing 4 hour, 1 hour, 30-minute candles to draw order blocks from. Now, if you're going to be mapping these up in your charts or trading order blocks, piece of advice is the higher in time frame you draw the order block from, the more reliable it is. So if you identify this type of zone or order block on like the 1 minute, the 3 minute, the 5 minute, they do work out often, but the win rate of it's a lot lower. So 4 hour, 1 hour, 30-minute, even 15-minute zones like this tend to work really nicely compared to the much lower time frames. So that's why you'll see on my charts why I have time frames on these zones. So here, for example, 15 minutes, 5 minutes. So the reason why you see there 4 hour, the reason why I put the time frame in these zones and I label it is so that whenever I am reading the charts or I'm trying to make a decision on whether to get in on a trade, exit a trade, etc., it helps me to make decisions faster, because if I'm looking to buy off this zone, for example, because it's labeled 5 minute, it's going to help me to take a step back and think, right, well, it's going to be less likely to hold that if there's a 1 hour zone or a 4 hour zone around it. So I like to weigh the higher time frame zones a lot more than the lower time frames because they're much more reliable. So if you've ever wondered why I have time frames in all these zones, that's why. Okay, so let me just check the chat quickly, and then I'm going to break down the the top 10 analysis. Dead Sick said, Claudia, please put that drug dealer hat on again. I don't have it with me. It's in Ireland at the minute. Hopefully it's not lagging anymore. Roman, is it still lagging quite bad? Okay, cool. Nice. Just quickly checking the chat. Yeah, someone asked for a like goal. Unfortunately, there's not going to be a giveaway today on the stream. However, I am going to double check with the team and see if I can run one on my X account so that you guys aren't empty-handed. So I'll drop my username in towards the end of the stream, and then you can go and check. I'll post a giveaway soon. Okay, sweet. That's it. Right, let me actually mark up London Open quick and just make sure that we're not missing any trades. So, oh yeah, I need to show you guys how I mark the opens as well. So yeah, I do like to have these lines for the opens as well. It just helps me to, yeah, like I said, make decisions a lot faster when I have all of these levels marked up. So London Open here, looking at the 1 minute time frame, we can see a push down, failed to break that low, swept that internal range high by a little bit, and is now pushed down and broke that low the second time round. So for me to actually look for a trade right now, I need to take a step back and look at the higher time frames first, which is why I'm going to run you guys through my top-down analysis from the higher time frames. I've found that when I jump onto the charts without doing that prep, I often make a series of bad decisions. I get on the wrong side of the market. I hold my trades for longer than I should, even though there's confirmation that my bias is wrong, etc., etc. So I haven't done my top down yet for today because I was saving it for the stream to do it with you guys. So we'll do that real quick first. And then we'll come back once we have a better idea of where price is at from the higher time frame. because one of my main rules and something I have on my monitor is higher time frame narrative, lower time frame entries. For me personally, it's extremely difficult for me to catch good wins in the lower time frame if I have no idea what price is doing on the higher time frames first. So if you're a lower time frame scalper, I highly recommend that you get into the habit of checking the higher time frames first before dropping down to the lower. So let's do that. And I'm going to pull up actually, we'll just stay on this one to save my screen from lagging. Okay, so going to start on the monthly. Let me hide these actually, because it's going to be a bit messy. Starting up on the monthly time frame. So gold is primarily a bullish pair, right? Meaning that the majority of the time it's uptrending, right? There's very small stints from the monthly, where price is downtrending, in comparison to the overall uptrend, of course. See, this one lasted for a few years, this one for a year, right? So from the monthly, they look like small stints in comparison to the overall uptrend. But gold does go into some really nice downtrending markets, but when you take a step back on the monthly, you can see that it's primarily a bullish pair. So since I've started trading gold, I would say, I think it's always been bullish on the monthly time frame. You can see, so I started trading gold around here, and you can see this really nice strong uptrend on the monthly time frame since 2022. Right, so when you're doing your top-down analysis, it's usually a safe bet that the monthly time frame is going to be bullish for gold. Okay, so we have bullish on the monthly, then I'll drop down to the weekly. Now, whenever I'm doing my top-down analysis, I like to focus on the most recent leg, right? And on the weekly time frame, this is our most recent leg. I would consider the weekly time frame right now as bearish because we're seeing some lows breaking here, and here. We're also seeing several bearish engulfing candles. So there's one here, and then it looks like there's one print in here. Okay. This could change. We still have 1 day and 14 hours left on this weekly candle before the week closes and this candle closes. So it's going to be really pivotal whether this closes down here or if it turns bullish before the market close on the weekend. But yeah, right now, just from looking at this leg itself, I would consider the weekly is looking bearish. Dropping down to the daily. Let me actually make a note of this so I can add it to my charts after. So monthly is bullish, weekly. And then the daily. Okay, daily again is looking bearish. We have this really nice bearish engulfing candle here. Pull back into the imbalance of that candle, drop to the downside. All this internal range liquidity has been swept. This low's been swept. If price was truly done with the upside now, it would have came up and broke that sorry, let me just take a step back. So it's pulled back here and filled in that imbalance. Nice push to the upside, right? If price was truly done with the downside right now, we would have seen a break of this high here. But instead, what's happened is this high is held. Price has failed to break above it. And then it's pushed down and targeted this previous low. So I'm putting down the daily as bearish as well. I don't think it's done with the downside yet, personally. Let me just double check the chat. Okay. I don't see anybody mentioning lag, so hopefully it's okay now. Okay, so yeah, it's looking pretty bearish on the daily too. So I do the monthly, the weekly, the daily, and then the 4 hour. And again, I'm trying to ignore all of this price action to the left, because if you take a step back and you try to analyze the directional bias on a single time frame with a lot of data on your screen, you're going to get severely overwhelmed. So I like to just focus on the most recent leg. Because otherwise, if I, for example, was taking a step back and I was like, okay, push up, it looks bullish. But what I'm ignoring is the selling pressure right now. It doesn't really matter what price done to the left when you're looking for a trade to trade with the trend right now. What I'm basically identifying is whether buying pressure is stronger than selling pressure right now, today, or whether selling pressure is stronger than buying pressure, so that I can kind of develop a bias and figure out which direction I want to trade in for that day. So yes, we have this really nice bullish engulfing candle here on the 4-hour, but we're seeing lows breaking and highs holding. So again, 4-hour bearish. So far it's looking, well, yeah, it's looking like I would want to be looking for shells today. 1-hour time frame, right now we have this bullish leg. So what I would want to see here is a low fail, right? I want to see lows failing on the lower time frame. And this is where the 30-minute, the 50-minute is going to come into play here. Because right now we have price pushing up, breaking internal range highs. We're not sure if it's done with the upside just yet. I would want to see some lows breaking, pull back, get in on a sell. So it's aligned with those higher time frames. Just double check in the chat. Roman, is it still lagging quite bad? Yeah. I only have, it could be because I'm moving my charts around a lot. Okay. I feel like it stops when I stop moving. Okay, cool. Okay. Okay, so yeah, I'll try. I have such a habit of moving the chart so much when I talk. I'll try. Okay, so yeah, we're down to the 30-minute now. I wouldn't go any lower than this until I'm looking for an entry. Just for the top down analysis, that's what I stick with. Monthly, weekly, daily, 4-hour, 1-hour, 30-minute. You don't need any more than that to try and develop a directional bias for the day. But yeah, so now that we've gathered that a lot of the time frames are looking bearish, these 1-hour and 30-minute time frames are looking a bit, this most recent leg does look a bit bullish, but like I said, I'm just looking for some signs that selling pressure has regained control here to get in on a continuation sell. So let me just pull back my drawings again. And we're going to stay on the 30-minute for this one. So I'm going to talk through liquidity levels now, key points of interest that I have my eye on. So the reason why I had a little dollar sign down here is because there was a high impact news release at 3 p.m. on Monday that was completely untapped. So the news release happened, it was ISM manufacturing, I believe. So it wasn't a massive one, but it was still a red folder news release. And there was no pullback. So price shot straight up, headed straight towards the weekly and the monthly open, which was also the daily open for that day, and left behind a lot of liquidity there. So that's one thing that I'll mark up on my charts if there's liquidity left behind, is if there's a news release or an open with no pullback prior to the move from the volatility of that release or open. I'll mark that up on my charts as key liquidity level, because there'll be a lot of liquidity resting there. So price is now taking that out, right? So now it's really, does it want to come down to 4,400 and fill in this 4-hour imbalance to the downside, or does it want to come back to the weekly and the monthly open? Because as I mentioned earlier, we had price come back, wick off the weekly and the monthly open, and then just fall to the downside. Now there's still liquidity left up there from the weekly high and the monthly high, because let me just zoom in quick and then I'll leave my charts be so I don't lag. So we had the monthly open here, price shot down, took out the previous day's New York Open, London Open, came back to the weekly and the monthly open, right? And then that's whenever we had that initial drop down. Now that means that because price pushed down to the downside directly from the weekly and the monthly open, that means a lot of people would have thought, okay, new month, price is bearish, let's get in here. There's going to be a bunch of sellers holding positions from that area with their stop losses around here. There's going to be pending orders in there. So I really like to think in terms of liquidity, like where's the liquidity resting, because price tends to come back to those areas eventually, right? Again, it's just something for me to be mindful of for somewhere to enter from or somewhere to trade to. Now, the reason I have these lines marked here for the weekly and the monthly high is because price pushed up, created that high, fell to the downside. It's came back and tapped into the weekly and the monthly open, but it hasn't taken out that previous high to the left, right? Which is the monthly high. It has now, however, came down and taken out the monthly low. So what I'm looking for from a higher time frame perspective is ideally for price to come down to this area, 4,400, potentially lower. Show me a shift of change of character, a shift of order flow, and to look for long-term buys back towards the monthly open or above. It could be that price just is done with the upside, but there is a lot of liquidity rest in there. For example, like I mentioned with the untapped open and the untapped news releases, when they're untapped, there's a lot of liquidity rest in there. We had this New York open from Tuesday this week. Price again has fallen to the downside immediately, meaning that there's going to be a lot of people that have jumped into sells there that are still holding sells from there, and also pending orders, right? Prices came close to the New York open and it's just fallen to the downside. So there's a lot of liquidity resting here and there's a lot of liquidity resting up here. So yeah, I would like to see price come back to those levels, to be honest. But if I just jump to the 4-hour time frame, we have this 4-hour imbalance to the downside here. So I feel like price could be heading towards there today, hopefully. Price wicked this previous low just by a little bit. So from the higher time frame perspective, that's essentially like equal lows. It did sweep it a bit, but there's still going to be liquidity resting down there. So I'm liking the look of potential shorts down to here today, or else if price shows me that buying pressure is stronger than selling and we're seeing a series of lows holding highs failing, price breaks above here, then I will be looking for buys towards the weekly and the monthly open. So yeah, let me just check the chat. Yeah, someone said it lags when you move your mouse. Yeah, I'm trying so hard not to move my charts as much. No, I'm not in any trades already. Graphene says, hey Claudia, have you tried gamma exposure or GEX levels? I've never heard of them. Could you explain what that is? Gamma exposure. No, I've never heard of that. Someone said, is the analysis based on conspiracy theory? Yes, always. Guys, if anyone has like any serious questions regarding strategy, entry model, technical analysis, psychology, how to handle losing streaks, like if there's anything that you're currently struggling with on your journey, like shoot them my way. I've been doing this for 8 years. I feel like I've experienced many ups and downs, and I'm more than happy to share my experience to help you guys on your journey too. So if you have anything you want help with, drop it in the chat, because it's just me today, so I don't have anyone else to talk to. So please just pester me with questions, as many as you can. Mawin Job said, hey Claudia, do you trade CFDs? Yes, I do. So I started trading CFDs I traded CFDs for 7.5 years, and then only in January this year did I start trading futures. So I've only been doing futures now for 6 months, but because I traded gold on the CFD side for so long, it was just a matter of adjusting to the different platforms and the different, like ticks instead of pips and contracts instead of lots, etc., etc. So price action is the same on gold, on the futures and CFD side. So I'm quite grateful that I spent so long on gold because it made the transition to futures a lot easier. But yeah, I trade both now. Vector Motorsport said, do you trade NQ? I have dabbled in it a little bit just because the guys in the stream, Nick and Celine and the other ones, they trade NQ a lot, so it did pique my interest. I did start backtesting on it a few weeks ago. It's quite nice from like the 50-minute, 30-minute. I quite like it. I don't feel confident enough yet to trade it from the lower time frames, but it is on my to-do list to build case studies on it and backtest it more. Oh, this is a good question. Tour of the Woods says, what was your biggest hurdle in getting profitable? Many hurdles. I think one of the biggest ones that I feel like not many people talk about is financial thermostat. So I'm not sure if you guys have ever experienced this. Maybe it's probably more relevant if you've traded personal capital, if you trade like your own, if you've traded your own account in the past. But when I first started trading, I didn't know what prop firms were. I traded personal capital for the first few years. I wish I found prop firms from the start. So if you guys have started your trading journey and you found prop firms from the beginning, you're very lucky. I wasted a couple of years trading £100 accounts, blowing it, starting again, blowing it, because it was really hard to have like capital to actually trade with when you're beginning. So one of the biggest challenges I found was my financial thermostat. So basically that's like, it's what you believe you're worth in your subconscious. So just say, I think around the time my salary, just say, for example, was $1,000 a month, right? With my personal account, when I started seeing success in growing it and compounding it, every time my trading account broke above $1,000, for example, and I just say it got to 1,500, it was only a matter of time before it came back to 1,000 and repeat. I really struggled to break above that threshold for a very long time. And then I learned about financial thermostat, and it's basically what your subconscious thinks you're worth, or what you're comfortable with, I should say. So it's definitely like deep on the psychology side, is if you're used to seeing $1,000 come into your bank every single month, that's an amount of money that you're comfortable with. Therefore, anytime you have more than that, you get uncomfortable with it, and then you kind of give it back to the market, basically. So one of my biggest hurdles was trying to overcome that and force myself to be more comfortable with a higher amount of money. And it's been a really messy process, to be honest. Very long, but worth it. So I've been slowly increasing my financial thermostat for years now. And one of the ways I would recommend overcoming that, if you find that yourself, if you're struggling to see your bank account break above a certain amount or your trading account break above a certain amount, I would recommend just saving on the side, setting savings aside, and try and break your savings above that. And it's slowly going to introduce you to being more comfortable with a higher amount of money. That was one of the main ones. I just felt like every time I reached a new milestone in my trading account, I just gave it back to the market because I was uncomfortable with that amount of money or success, that I was like, nope, just give it back to the market, and my trading account went back to the way it was. So there's some really good, valuable, interesting videos on financial thermostat and how to fix it, how to correct it. Definitely recommend looking into that. Jesse James said, Claudia, where did you learn charting and your trading? Any mentor or self-taught? I haven't learned from like a single person. I've bought a lot of different courses. I've learned from a lot of different people over the years. And Honestly, I never found anyone that, like, what they taught me, I took 100% of it and thought, that's it, I don't need to learn anymore. It was, I learned from one mentor for a couple of months, and then moved on, maybe 6 months, moved on, etc., until event. And I think the key thing in learning from all these different mentors was I made notes on everything. So I have around 17 notebooks, packed with notes from every single mentor. Then it reached a stage where I said to myself, right, I have enough information, I know enough concepts, I have enough strategies to work with here. I need to stop learning new ones and figure out which one to use. That's where the notebooks came in really, really handy, because I went back and I was like, right, I really like this concept or this aspect of that strategy. I'm going to take that and keep that. And then I took one from the next person, one from the next person. And then as I was back testing and building case studies, I started noticing patterns myself. And I was like, oh, I really like that, I'll take that. So that's kind of how I trade now, is it's like a mishmash of different concepts, different ways to read the market, different pieces of strategies that just works well with my brain. And that's how I trade now. So I don't personally believe that you're ever going to just learn from one mentor and that's it. Like, you kind of need to study price action and the market yourself and figure out what works best for your brain, right? Because we're all wired completely differently. There isn't a single trading strategy that fits all. You might understand a strategy really well, but when it comes to applying it and executing it, it might not be the best for your patience levels, your schedule. Like you might learn from a mentor that's more of a swing trader, but you don't, more of a scalper, but you don't have time to be sat in front of the charts looking for setups for hours a day, right? So swing trading suits you better, which means you're going to need to adapt that to more of a swing trading style. Or it might be just your patience levels. Maybe you're more likely to go into tilt the longer you hold a trade. So more of a scalping strategy suits you better, right? So I personally believe that it's not just a matter of finding a mentor to teach you a strategy and you're done. You still need to study the markets and study yourself and figure out what works best for your brain and how to read the market. So yeah, I've just taken bits and pieces from loads of different people and from my back testing. Let's see. Mechanical Orange says, where are you from? Do you speak Spanish? I am from Ireland. I'm currently living in England and I don't speak Spanish really. I have started learning though. I'm on day 120 of my Duolingo streak. So ask me that in a few months and hopefully I'll be able to hold a conversation in Spanish. That's the goal. NQ Love said, I hit my daily loss today. I have $500 left as drawdown. Do I have any hope? Yes, definitely. So right now, when you're in that kind of mindset of, it's basically gone, like I've basically failed, like it's going to be really hard to recover, that's just your mind playing tricks on you. The pivotal thing, the key thing for you to do right now is step away, right? Take a couple of days off. It's Thursday today. I would recommend just forgetting about those accounts until Monday for the next few days. Pull yourself out of the stress of trading, right? Because sometimes we get really sucked into the charts and it just messes with our head, right? If you just take a step back, remove yourself, like go do things you enjoy, go to the gym, do work for your to-do list, tidy your space, read a book, go for a run, whatever, right? Whatever makes you feel happy and whatever you find joy in day-to-day life, do that for a few days. You're going to realize you're going to lose that attachment to the status of your accounts, to your P&L, right? Right now, because you've just experienced a loss, a losing day, and hitting your daily drawdown, you're going to have heightened negative emotions, and that's not going to help you think clearly. And tomorrow, even though it's going to be a brand new day, those emotions are still going to be lingering, right? If you genuinely are motivated to recover these accounts and make that happen and reach payout on these accounts or pass if it's an evaluation, the best thing you can do is remove yourself for a few days, reset, get rid of that attachment to the outcome of your last trade. And when you come back on Monday, and also back test and review your rules and study price action, over the weekend, and when you come back on Monday, you're going to have the odds are going to be far more in your favor. One of the main things I like to do, apart from taking a step back from the charts, is over the weekends when the markets are closed and I don't have any temptation to enter a trade, I like sitting in front of the charts and back testing and building case studies, because that forces me to focus on process over profits again. And again, that'll give you your best chance on Monday, because when you're just sat in front of the charts solely for the purpose of trading, you can very easily get more, how do I say this? Your priority becomes how much money can I make right now, rather than what is price action telling me that it wants to do next. So we start to focus more on profits over process, and that's how we slip up, take losses, make mistakes, make bad decisions, go into tilt. But when you sit and back test and you just study price action and what it's telling you, you focus more on process over profits, it's going to help you to make better decisions come Monday. So yes, I truly believe that you can recover that. Just make sure that you're handling the next few days the right way, so that when Monday comes, it's more of a controlled decision-making process rather than impulsive tomorrow. How do I say this? Kim and Linden, not sure how to say your username. What do you trade? So I only trade gold. I've only traded gold for 4 years now. I came from CFDs, so I used to trade the Dow Jones, which is US 30 on the CFDs, and GBP USD, which is a currency pair. 3 years ago, can't remember exactly, I narrowed it down to just gold, and I've been trading just gold ever since. Robot says, so someone previously asked me if I used gamma lines or something. Gamma and Gex, that's an options trading strategy, says Robot. Okay, Amir Rez says, I usually take a bit more time to pass evals because I trade them like fundits with micro. I love that. That's so good. I find as well, the longer you take on an evaluation, the more you're going to treat the fundit account with respect. In the past, that's one of the hurdles I've also had to overcome, is slowing down, or like going too fast, trying to rush the process too fast. I've really had to reprogram my brain to slow down. And one of the problems I found with passing evaluations too fast was that whenever I reached fundit, that momentum of over leveraging, being aggressive, over trading really leaked into the fundit account, right? Fundit accounts are very much like easy come, easy go. I personally feel like the faster you pass your evaluation and reach fundit, assuming that there's some form of tilt in there and you're not following your plan, right? It's different if you pass really quickly whilst following your rules. That's different. That's fine. But if you're rushing your evaluation you pass by not following your rules, the likelihood that you're going to blow up on your fundit is much, much higher. So definitely amazing. Keep doing what you're doing. Treat your evaluations like fundit accounts, and then whenever you get the fundit, you're going to have the right momentum and the right mindset, and you're also going to have so much more confidence because you've just proven to yourself that you can do it by following your rules and taking it slow, and all you have to do is just keep doing what you were doing. So that's amazing. Nixon Nick said, I'm new here, do you only trade London? No, so I'm in the UK, so honestly I have the privilege of being able to trade any session really, apart from Asian. I was going to say, because I know some of you guys are in different parts of the world and it's probably really late for you right now. Right now for me it is currently 8:45 a.m. So for me, London session is at 8 a.m. and New York Open is 2:30 p.m. So I'm quite lucky where I can trade both. However, unfortunately, one of my favorite sessions is Asian session, so I end up staying up all night anyway. I think I might have to look into moving to a different part of the world. Let's see. Sakuna said, what is your highest losing streak? What mistakes did you make which resulted in that losing streak, and how did you overcome that? I remember I've had many losing streaks. I remember what was it? I remember losing like 17 or 18 trades in a row in a day before, like, was it maybe a year and a half ago? That was brutal. That was awful. I think honestly at that time I was risking very little. I was risking 0.2% compared to 1% that I usually risk. So I think that's one of the reasons why I took so many losses in such a short space of time, is like going back to what I said. I wasn't really focusing on process as much, because in my head it was, well, it doesn't matter, it's 0.25%. It felt like nothing to me compared to what I usually risked. So I just kept entering and yeah, taking like 17, 18 losses in 24 hours, I don't recommend it. But that was one of the reasons why, was because I was risking too little for my threshold. So yeah, kind of similar to the financial thermostat, we have a risk tolerance as well. Hopefully some of you guys have heard of these concepts. I feel like they're really, really important, and the psychology side of things is extremely important. But we have a risk tolerance too. And it's really important that you find what you're comfortable with risking. So I'm sure many of you have experienced over risking, right? Most of us have probably been there. We are trying to rush an evaluation, you're trying to hit payout, and you want it done now, so you size up too large, right? Over risking. Most of us have probably felt the emotions from over risking, which is fight or flight, anxiety, right? Fear, hopelessness. You know you're over risking if you start praying for a price to hit your TP, right? Most of us, I know some people are more on the lower risk side, but over risking, right? However, what many people overlook is there's also some negative consequences to under risking, like what I just explained. When you're risking lower than what your risk threshold is, you're going to care less about the entries, you're going to care less about the setups in general, because it's going to feel like you don't really have anything to lose. So it's really important that you find that what you're comfortable with and try and stay in that threshold. So highly recommend using a journal for that. Document, just say for example, you're risking 0.5%, right? Document, how do you feel when you enter that trade? How do you feel about the risk on the table? How do you feel when price is floating in drawdown? If your emotions are too heightened, then you're over risking, right? Whereas if you feel calm, you feel like you don't care, you feel like you don't even need to watch the trade play out, or maybe you're entering trades you don't care about, or you don't feel a good quality, you could be under risking. So maybe your happy medium could be 0.75%, right? So it's really important that you figure out where your risk threshold is, stick with that, so that you're able to make the best quality decisions you can. Once you get more comfortable with that, increase it as your account balance increases too. So yeah, with regards to losing streaks, make sure that you're using risk that is in line with your risk threshold or your risk tolerance. Really, really important, and it's something that people often overlook. Another quicker way, rather than using a trade journal to figure out what you should be risking, because also risk per trade is extremely subjective, and I feel like this is a common question that people ask a lot on social media, is how much do you risk per trade? And then often you get a lot of backlash, like, oh, you're over risking or you're under risk. Nobody says under risking, sorry. Everyone complains that you're over leveraging, you're gambling, right? But risk per trade is extremely subjective, because you could be trading a 150k account, right? And someone else could be trading a 150k account. They could be really happy using 1 mini, whereas they're comfortable with that, whereas you might have less experience with higher risk, and therefore your risk threshold or your risk tolerance is 3 micros, right? So with regards to risk per trade, it has nothing to do with account size. It has less to do with account size and more so to do with what you're what you're comfortable risking, right? Because if you over risk, you're going to make bad decisions, you're going to go into tilt, etc., etc. So yeah, when you enter a trade and you set your stop loss and you've decided how much risk you have on the table for that trade, just ask yourself, how would I feel if my stop loss gets hit right now? Does it make me feel panicked? Does it make me feel fearful? Or do I feel like it's easy to recover, right? That's how you figure out whether your risk is appropriate or not. And once you have that appropriate risk, you're going to be able to experience less avoidable losses, right? And try to get out of that losing streak. So, sorry, that was a long-winded answer to that question, but hopefully that you guys got some value from that. Drizia said, how long did it take to become profitable, and what change can you say made the difference in your journey? So I didn't get my first payout from trading until I think it was like year 4. So I think I had my first ever payout from prop firms like 2022, maybe 2021. I had a few small payouts in 2000. So I started trading in 2018. I think I had maybe like a £250 or a £500 payout was my first prop firm payout at the end of 2021, I want to say, or 2022. However, even though that was like 3-4 years of like not seeing any results, getting any payouts, etc., in the space of 2 years, everything changed. So from between getting my first payout around 2021 to 2022, in 2023, I was able to quit my job and take this full time. And in 2024, I had my first 100K month. So the first 4 years was very much, 4 years was very much like, does this even work? Am I being scammed? Are people online lying to me? Like, do they even make money trading, etc.? Because when you haven't seen proof that it works for you yet, it's very easy to like doubt whether it works or whether it's for you. So the first 4 years were very, very slow as I was learning strategies, understanding price action. And then in the space of like 2-3 years, everything just drastically changed. So you guys have seen that like compound chart, or the graph, where it's like you see basically like the road to success is like very, very small incremental increases, and then it'll just burst, right? So I felt like that was my situation. So if you're in it where you feel like maybe you're going in circles or you're not seeing the results that you want, keep at it, stay consistent, because honestly, your entire life can change in the space of a few weeks with trading if you're locked in, and all the effort you've put in over the years will compound, and it can just flip like that. Not from over leveraging, just from having the right opportunity in front of you. Maybe you've got a funded account, but you're logged in, you're in the right headspace, market conditions are good. At some stage in your journey, everything is going to be aligned, and you're going to have that breakthrough. But only if you stay consistent and do the work leading up to that opportunity. Let's see. G-Star says, how to manage a $2,000 loss limit. How long do you take to pass an account? Okay, there's a couple of questions here, so let me just answer it one by one. How I would manage a $2,000 loss limit is divide it by 10, right? Now, again, this is subjective as well. You really need to understand your stats, right? You need to understand your data. You need to understand what your win rate is, and therefore what your longest losing streak could look like. So I have it somewhere. It's going to take me a while to find it though. Yeah, never mind. So I have like a chart or a graph somewhere which is like aligned with your win rate and the likelihood or the probability of you having like 5, 6, 7, 8, 9 losing trades in a row. I'm sure ChatGPT could spit it out to you as well. It's just maths. So you need to figure out your stats. Let me pull up actually. Sorry, my brain's processing. This is a good starting point, is risk to ruin. So let me see. Firstly, you really need to be like back testing. I recommend FX Replay. It's really, really good. I'm trying to find the good one. Let me see. That doesn't look safe. Risk over 2 seconds. I'm on a different tab here. Switch markets. Okay, let's try this. While I look for this, so basically you need to go and you can use any backtesting software, right? You could use FX Replay. I believe TradeSella has backtesting software in there. Use your strategy, right? Figure out what your trading rules are. Whether your system is mechanical, discretionary, whatever it is, you need some form of guidelines, some sort of rules to tell you when to enter a trade, how much risk to use, where to place your stop loss, and where to exit it, and also management with when do you move your stop loss to break even, when do you take partials, or do you not do either of those things, right? You need a set of rules that explains your strategy and that guides you to make decisions in the markets, right? Now go to some form of backtesting software. Maybe you want to use Bar Replay and TradingView. Whatever it is, I do recommend FX Replay because when you take trades on that, it collects the analytics for you. So you don't need to try and figure out all the stats yourself. It collects it, it tells you your win rate, which day you're most profitable, which day try to avoid because you've taken the most losses on a Monday perhaps, etc., etc. So once you have your trading rules, your trading plan, and you found a backtesting software, you need to complete at least 100 trades over at least 12 months of data. That is going to give you a true reflection of how profitable your strategy is, your win rate, your average risk to reward, what your potential risk to reward could be. So maybe from those analytics, you'll see, okay, this entire backtesting session, I've traded 1 to 3 risk to reward, but in the analytics, it'll tell you your ideal risk to reward was actually a 1 to 6, right? So from that, you can adapt your strategy and you can realize, actually, I could be shooting for double the risk to reward here. So yeah, that's the first thing, is understanding your stats, right? And from that, from your win rate, your longest probability losing streak, etc., then you can figure out how much to risk per trade. For me personally, if I have a $2,000 loss limit, I divide that by 10. So that means I would be risking $200 per trade, because that gives me room for 10 consecutive losses in a row. And for me personally, that makes me feel safe. It makes me feel like my account's protected. Now, and then if you shoot for 1 to 2 risk to reward, say your first trade on the account, you risk $200, you're aiming for 400. Now you have room for 12 consecutive losses in a row, right? Because you're $400 up. And then if you take the next loss, you still have room for 11 consecutive losses in a row, right? So I like to divide my overall risk by 10. Now I also like to use dynamic risk. So if I go into drawdown, I will divide the remaining risk by 10, right? So that means that the more into drawdown you go, the less risk you're using, and then the more you go into profit, the more risk you're using, right? Search up dynamic risk sizing if you haven't heard of it before. The next question was, do you take profit small or go for big profit? Because small profit risk to reward does not look good. Big profit risks too much. Again, you really need to be going in and back testing. It's not so much of, first, it depends what markets you're trading. It depends what strategy you're trading. It depends how much time you have to trade and to be in front of the charts and make decisions. It depends what session you're trading, right? There's so many factors that come into play that these are the types of things you have to kind of decide for yourself, if that makes sense. Like, people like me can guide you, but we can't make that decision for you. Get FX Replay if you can, or else go through TradingView and just try and build case studies on when your strategy has worked and when it hasn't. And that's going to tell you whether you should be holding your trades for longer or not. If you're newer to trading, if you're still in your first year or two, if you're still figuring it out, I highly recommend lower risk to reward. Trying to shoot for like a 1 to 6 or even a 1 to 10 risk to reward. It's great when it works, but the thing is, it's not going to work as often, and that can really shoot your confidence as a new trader. Because if you take 10 trades and 9 of them are a loss and 1 of them's a win, yes, you're in break even or in profit, but your confidence is going to be shot taking 9 losses in a row. Whereas if you're shooting for 1 to 1 risk to reward or 1 to 2 risk to reward, you're going to catch wins a lot more frequently. That's going to boost your confidence. That's going to help you to really dial in on your strategy and on price action and make better decisions. And it's going to help you to shake off losses easier, right? Because if you imagine taking 9 losses in a row, it's going to be extremely difficult for you to still follow your rules and follow your plan, because you're probably going to want to revenge trade. You're probably going to want to over risk to make back the losses. It's going to be extremely easy to go into tilt and make bad decisions if you're shooting for higher risk to reward and taking more losses. So yeah, I do recommend going back into back testing and getting your stats, but for right now, I recommend no more than a $100 to $200 risk per trade, and shoot for 1 to 1 or 1 to 2 risk to reward scalps. Build your confidence up, compound your account, and also with lower risk to reward, there's less time for you to get attached to the outcome of a single trade. Like if you enter a trade and you're trying to catch a 1 to 6 risk to reward, sometimes that can take like over a day to play out, right? Sometimes longer, depending on what time frame you're trading from. And just say that trade runs in profit, right, for 2 to 3 days. Can you imagine the emotions you're going to feel when that shits down and takes you out and hits stop loss? That's a situation that's going to take at least a couple of days to recover from, because you're going to be pissed off, right? So the shorter time you're in trades, the less attached you're going to be, the less likely you're going to go into tilt as a beginner until you've mastered your strategy and what works best for your system with regards to risk to reward and what your win rate is, etc. So hopefully that answers that. VIJ Bull asked how to take a perfect trade with only support and resistance and which time frame to look at. Okay, so for me, I like sorry, I'm just seeing if I'm lagging with the screen share. I'm really trying to not move my chart a lot. That's why I'm doing a lot of Q&A at the minute. Okay, so let me pull up an example. I think we had a really nice example over here. Okay, so here, for example, so support and resistance, I do call it like supply and demand, but it's the same thing. So my support is the floor. So I refer to support as demand and supply as resistance. I believe that's the right way around. So demand's basically the floor because there's buying pressure and price is failing to break below. Supply is the ceiling because there's selling pressure stronger than buying, and therefore price is pushing down. So what I'm looking for is, firstly, the top-down analysis that we went through at the start, and then secondly, the 15-minute or the 30-minute time frame. I want to identify whether buying pressure or selling pressure is stronger in the leg that I'm looking at or in the time frame that I'm looking at. So for this example, right, what I'm looking for to identify that selling pressure is stronger than buying is a series of highs holding, lows failing, right? So price dropped here, it pulled back, dropped again. So that's our first low that's broke. So let me mark that up. First low that's broke, right? It's came back towards this high, but it hasn't broke above it. What has it done instead? It's dropped lower and broke more lows. So immediately we have 2 highs holding, 2 lows failing, right? Now, this one's interesting actually. So you see the way price pushed up here and broke this previous high. I'm going to try and stop moving my screen. By a wick, right? I don't consider that a high broke. I consider that the high's held because it's broke up by a wick and not a candle body. Because price shot up there, broke the high with a wick, and then the candle body has closed down here, right? Open and closed below that previous high. So I don't consider that a high failed. I consider that it's a internal range sweep, right? It was just a liquidity sweep. Price is then pushed down again, broke another low, right? So that's the first thing. I need to identify whether I'm looking for buys or sells, because I try to only trade in continuation with the trends. So in this example, I know I'm looking for sells because selling pressure is stronger than buying. Now, this was the New York Open candle. So just say I was trading New York Open. What I'm doing here is I'm waiting to see if price breaks another low or if it pushes up and breaks the highs. New York Open candle here, price pushed down, broke more lows, okay? So at that stage, what I'm looking for is a sell off the previous area of resistance, right? Supply. I'm trying to remember the right way around. So what I'm looking for is, do you see this bearish engulfing 30-minute candle, right? And if I talked about this at the start of the screen, I also look for engulfing candles to help me to decide to trade in the right direction, or to help me show that price is turning around for us from a certain open or a certain level or a zone. So bearish engulfing candle, push down. So that is the area that I would draw my zone from, right? Because selling pressure is stronger than buying because it engulfed. Price is pushed down, broke some lows to the left here. That's telling me that if price wants to continue lower, I can expect this low to get targeted and not this high, right? Because we're seeing a series of price not breaking the highs but breaking the lows. So we're just repeating that pattern. So price returns to the New York Open for that day. Like I mentioned before, sweeps liquidity, takes out sellers to fuel for a further push to the downside. So that is where I would get in on a sell for a continuation. Stop loss above the high of the candle that created that zone. TP at the previous low. 1 to 3 risk to reward, 3.5 risk to reward. So yeah, I've actually got it here. I couldn't for my rules. So yeah, the first one is identify whether price is moving up or down, right? Like I said, follow whether highs are holding, lows are failing, right? That means you're looking for a sell off a supply zone. Or if lows are holding and highs are failing, that means you're looking for a buy off a demand zone. Now, it's not enough just to draw out the zone and to wait for price to come back to it. What I need to look to enter a sell off a supply zone is I need price to push down, break a previous low after it's created that zone, because that tells me selling pressure is stronger than buying. And then when price comes back to that area, then I'll look for a sell. If price didn't push down there and break that previous low, then there's no sell, right? There's no sell. So that's a really important rule. Is if you're entering off a supply zone, wait for a sell or wait for a low after the zone was created to be broken. If you're looking for a buy, let me pull up a demand example here. So again, this is another beautiful zone off a New York Open. We can see New York Opens here, right? New York Open volatility pushed price to the upside. Look what it done. Broke some previous highs to the left, right? Telling me buying pressure stronger than selling. Therefore, the likelihood that that zone is going to hold when price returns to that level is a lot higher. If price hadn't broke those highs, then there's no buy when price returns to the zone. Price comes back, taps into this zone. Buy, stop loss below the candle that created the zone, right? That you've drawn the zone from. TP at the previous high. 1 to 5 risk to reward. So very simple, but it's really nice entry model. I've used this for quite a long time actually, but be mindful that it is far more reliable on higher time frames. Anything above the 15-minute is good. These zones are reliable. When you start applying this to like the 1, 3, 5 minute, it works beautifully a lot of the time, but I would say more times than not, it doesn't work unless price is really trending. On the 50-minute, the 30-minute, the 1 hour, the 4 hour, the higher in time frame you go, the higher win rate this is. But if you are going to be applying this entry model to like the 4 hour or the 1 hour, what I do is when price comes to the zone, I'm not entering straight away from the higher time frames. I'm just observing price on the higher time frames, waiting for price to come into that zone. And then once it comes into the zone on the higher time frame, I'm dropping down to the 5-minute, the 15-minute to identify how price is reacting off that zone to see if there's actually an entry there. So let me drop down to the 1 minute on this to give you an example. So I definitely recommend using different time frames off these zones for confluence. If I can find this demand zone. No, it's too far back. Right, let me get that supply zone example. Where are we at? I'll pull up a different example here. Okay, so we'll do this example from the monthly open. So we had this area of supply above the monthly open, price pushed down, broke some previous lows, came back, beautiful sell opportunity there, but this is what we want to look at here, right? We don't want to trade the initial move when price creates an order block or a zone, supply and demand zone. I like waiting for price to come back to it. So this is what we'll be looking at over here. So we're going to draw this new zone from here, right? These are the last up candles before the fast move down that broke the previous low, right? So that's what we're drawing the zone from. So prices came back to that area. Now this is on the 15-minute time frame. So what I do whenever price returns to this zone is I come to the lower time frames to identify how price is reacting. Okay, hopefully there's no lag. Right, I'm done moving my chart now. Okay, so is it okay? Yeah, I was trying to yeah, that's fine. So yeah, if you're going to be using this strategy, if you're going to be trading off supply and demand zones, do not enter as soon as price comes back to that zone. You're going to experience a lot of losses. What you need to do is drop down to the lower time frames when price reaches the zone and identify the reaction, right? So here, the reason why, to me, this was a valid sell was because price tapped into the weekly monthly open, shot to the downside, broke some lows, right? And this is where it works really, really beautifully, is the entry model that we were looking at on the 50-minute time frame for this area, for this entry area, is the exact entry model has happened on the 1 minute time frame from that area, right? Because everything that happens on the higher time frame happens on the lower time frame first. So when price returns to the zones, drop down to the lower time frame, look for the exact same entry model just in the lower time frame, and that is going to tell you that the zone is far more likely to hold on the higher time frame. So here we have the exact same thing on the 1 minute time frame, right? We have order block, supply zone, resistance, prices pushed down, broke lows to the left, telling us that selling pressure is stronger than buying. Prices returned to the zone, and then it's dropped. So rather than just jumping in a sell from the 15-minute, the 30-minute or higher, if you drop down to the 1, 3, 5-minute, and you're basically looking for the exact same thing on the lower time frame to tell you that that zone's going to hold, that's your sell. That's your entry. So yeah, hopefully that answers your question. And then from waiting for that higher confirmation entry from the 1 minute would have give us an entry here, stop loss above the high that created the zone. And you could have held this the whole way down here, which would have been a 1 to 10 risk to reward. But yeah, I do not recommend holding for that long unless you're a swing trader, unless that is your strategy. I personally just feel like if you guys that are looking for a strategy and you're new to trading, just stay away from swing trading. Focus more on 1-to-1, 1-to-2 risk to reward, build up your confidence, compound your accounts. But yeah, that would have given a really nice 1-to-3 risk to reward to this previous 50-minute low. So yeah, hopefully that answers your question. Let me know if you have any other regarding the entry model. It said, oh bless, said, why not trade futures? Gold chart XAU pricing is off. Yeah, the pricing is off completely, but I've just found let me pull it up for you. So price action itself on, like if you're using TradeC or Tradeify with Tradeify, MGC price action is printing exactly the same way as XAU. I'm used to trading XAU. I've been marking these charts up for years. I have pulled up micro gold. Sorry, I know I'm being so difficult with this, but I found that there's a lag in TradingView and TradeC. So TradeC is like sharp, it's good. TradingView, there's a lag in price action for some reason. So yeah, price action is the same. Just ignore the levels, the price levels. Is it really bad? Yeah. Okay, cool. 2 seconds. Roman, is it fine if I don't move my charts? Okay. Okay, cool. I'll stick to the Q&As then. I'll not move my charts. So we don't keep the guys waiting. Okay. Wow, there's a lot of questions now. Let me see, 2 seconds ago. Someone said, I literally just started trading 2 weeks ago. It's hard looking at my eval right now. If that's true, if you've only started trading 2 weeks ago, you shouldn't be, don't be stressing about passing an evaluation. Don't be stressing about getting a payout. Your main focus for right now should be studying price action and figuring out a set of rules that you're going to follow. You don't even, if you're only 2 weeks into this, you don't even need to worry about a trading plan right now. Your main priority should just be just watching price print, like get familiar with how it moves, pick a couple of pairs, maybe one pair, whether it's gold, NQ, whatever, pick one pair and just watch it, like just study it, watch how it moves, get to know its personality. I do not recommend stressing about funded accounts 2 weeks into your trading journey. It's far too soon for that. Try to get a grasp on the skill set first. Joker said, nothing wrong with micros. I just took my first payout last week trading micros. Yeah, 100% agree. I only trade micros. Like I said, I'm 6 months into futures now. I only trade micro gold. So micros is great. Especially if you're new, you really don't need any more than a couple of micros. You can do a lot with like 1 or 2 micros. You really can. Someone asked to share my strategy. I've just covered that. Darren Griffiths said, do you ever use bookmap or similar order flow? I have looked into it. It looks really, really good. I do plan to try bookmap just not yet. It's one of those things where I need to, whenever I start something like that, I really like to just be in a cocoon and just like sit at my desk for a few weeks at a time. I just had a lot going on, traveling, the weather's been good, etc. So the weather, there's now a storm, so I plan on getting Bookmap and also Edgefill. If any of you guys have heard of that, that is my goal for this week and this weekend. Is basically, like I was mentioning before, the collecting data and analytics, a really fast like AI version of doing that. It's called Edgefill. I haven't tried it yet, so I can't recommend it, but those are the two things on my list to sign up for soon. Okay, let's see. Any other questions? Okay, Amir said, that's who said that it takes longer to trade evals and treat the evaluations as funded accounts. Replied, but Claudia, I know it's good that I take longer to pass, but when I go over my progress, I feel like I've taken more than I should, and seeing people saying you shouldn't spend long on evals makes FOMO. It depends how long you're taking. Like if it's taking you months and months, then you need to take a step back and reassess what you're doing and what needs to change, right? I personally don't feel like it should take months to pass an evaluation, but like a couple of weeks or a month, that's healthy. It's good. But if it's taking you very, very long to pass, then maybe just something in your strategy needs to change. So if you're not happy with your progress, or you feel like something's not right or something could be better, keep a trading journal. Document every decision, every trade, why you're entering a trade, why you're out of it. Just document. Don't worry about like reviewing it for right now. Spend a week, maybe 2 weeks, just documenting as much information as you can. And then at the end of that week or 2 weeks, go back and you're going to start seeing patterns, right? You're going to start figuring out, you're going to see your blind spots, and you're going to realize what needs improving. So if you feel like there's something missing there, that something needs to change, trade journal is the answer 100%. But I don't think it's a bad thing to take longer to pass an evaluation. It's much better than flying through it and then building bad habits that's going to be harder to overcome in the future. Sophie Love said, how many funded accounts do you trade at the same time? So with my Tradeify accounts, I trade 5. So I have 5 150k accounts, which is the maximum. I use TradeSyncer Trade Copier. So I just manage one account. It copies over to the other 4. So I trade 5. I used to have a rule on CFDs where I trade no more than 3 accounts at once, manage 3 accounts at once. It's different in futures though, because I've just got used to doing 5 now, but it feels like you're managing 1. At first, it's a little bit tricky to kind of let go of how do I word this? When you first start copy trading 5 accounts, it's like, shit, I'm trading 5 accounts here. Like it's a bit nerve-wracking, but you get used to it. You can kind of start gaslighting yourself into just thinking you're managing 1. So that's what I do. I just try to forget about the accounts that it's copying over to and just try to focus on the one that I'm managing. Let's see. Jason Wood said, do you day trade and close all by the end of the day? What's your setup for the day, and can you take us through the usual A+ setup? Yeah, so I've just went through the entry model, what I like to see, how I apply it to different time frames. So I've just done that, so go back and watch that. Do I day trade and close all by the end of the day? Yes, on futures, because I believe you have to. I believe you can't hold overnight. Someone can correct me if I'm wrong. But CFDs, I do hold for a couple of days sometimes. But yeah, no, I'm definitely more of a day trader, intraday trader. I think my average holding time is like 1-2 hours. I like to get in and out. I wouldn't say I'm like a scalper, like where people who enter a trade and close within 10-15 minutes. My average holding time is a couple of hours. Trades for today, I'm not in any trades for today because every time I move my chart, I lag. So I'm just focusing on the Q&A for today. Just holding the fort up while Nick and Selena are out. They'll be back soon. Balance capital, how much do you risk in funded accounts now? So I am trading, I've got 550k funded accounts with Tradeify. I'm risking around $300 to $400 per trade. So I mentioned at the start of the stream that I use dynamic risk. So when I start trading a brand new 150k account, I'm risking like $200 per trade, 300 max. As that moves into profit, I'm increasing it a little bit. If I'm in drawdown, I'm reducing that a little bit. But I would say my average risk per trade in those accounts is like $300, $400 maximum. Lobster rules, any giveaway today? No, but I need to double check with the team, but I'm going to most likely run a giveaway on my X account after this stream. So I'll drop my username in the chat before I leave, or I'll just do it now actually. Nick and Celine did not leave me with the giveaway instructions, so I don't know how to do it. I don't know how to do the wheel, the form, the chat, but I will. Yeah, hopefully it should be fine. I'll run one on my X account today instead. So I've just dropped my X username in the chat. Go keep an eye on that. As soon as we finish with the stream, I'll post a giveaway on there. I don't want to leave you guys empty-handed. Hopefully I don't get in trouble for this one. Let's see. Sorry, let me just find where we were in the chat. $4 years for a prop payout. What the hell? Yeah, it only took me about a year of trading prop firms to get my first payout. I didn't know prop firms existed for the first 2 to 3 years of my trading journey. Back then, prop firms weren't really a thing. I think FTMO existed and that was it. Obviously, like bigger like prop firms, like retail prop firms, like OG like floor prop firms existed. But for retail traders, like normal people who were finding it online, prop firms weren't a big thing. It's only blown up in the past like 5 years or so, right? The whole prop firm thing. But so yeah, I spent the first 2 to 3 years trading very, very small personal accounts. I found prop firms and then I had my first payout of like $250, $500 or something like that around a year later. So don't worry, it's probably not going to take you 4 years to get a payout. It's just because my journey was a little bit slower at the start because I didn't have prop firms. If I had found prop firms from day one, I would have had such an advantage. So those of you guys who are finding trading now or in the past year or two, like honestly, feel so lucky that you've got access to this many prop firms and Tradeify, most importantly, this early on in your journey. Let me see. Any other questions? Everyone's just going back and forth about how long it takes to be profitable. Darryl Rubin said, why would you keep going after 4 years with never taking a single payout? So I was trading alongside working as a lawyer. I was a contract negotiator. I worked with a law firm. So I was trading on the side. So there was no need for me to quit it, give it up. I was focusing on my career and then I was focusing on trading on the side. So those 4 years, it wasn't like that big of a deal that I hadn't had a payout, because for me, I was just studying it on the side. And then when I started getting payouts and I started seeing it working, that's when I left my career to take trading full time. So yeah, the key reason why I kept going is because I wasn't relying on trading for my full-time income. So that's really important that you don't quit your job or you don't cut your full-time income off too soon whilst you're studying trading. Make sure that you've got your bills covered, because as soon as you put the pressure on trading to pay for your bills and your rent and whatever, the odds are not in your favor. You're going to blow up faster. It's really important that you don't need to make money from trading whilst you're learning it. Okay. Roman, is that us or do we run till 10? I'm just wondering if I don't want to keep the guys waiting. Perfect. Okay, cool. I was panicking because I see so many questions and I thought I didn't have time to answer them. Okay, cool. So let's see. NQ Skrilla said, how long did it take for you to pass an eval, the first one? Honestly, I can't remember. Probably like a couple of weeks. I cannot remember. Not too long. I've always been more on the faster side of passing evaluations, but that's not a good thing because I've had to unlearn a lot of bad habits with regards to over-risking and rushing the process. I've really had to try and train myself to slow down. So I don't recommend rushing through evaluations because every time you over-risk and you don't follow your plan and you pass an evaluation or you reach your payout, that reinforces that bad habit. And it's the more you reinforce that bad habit, the harder it is to correct in the future. And the harder it is to undo. It's a lot easier to learn a new habit than it is to unlearn a bad one. So I don't recommend rushing through evaluations. It doesn't matter how long it takes you to pass an evaluation or reach payout. What matters is how well you follow your rules and how well you execute your trading plan, right? That's what matters. The most important thing right now for most of you guys is just making sure you're building good habits around following your rules. It doesn't matter if that takes you 2 days or 2 weeks or 2 months, as long as you're following your plan and you've back tested that plan and that's proven to you that it's profitable over a long period of time, then you're doing all you need to do. You can't force it, you can't rush it. Rusty Anvil said, do you mostly swing trade or day trade scalp? I mostly day trade scalp. Definitely an intraday trader. Let's see. 257 Joker said, trade seller is a good tool if you struggle to journal like me. 100%. It's an amazing tool. Really great to have. The automated trade journaling takes a lot of time out of journaling. However, I also feel like it's really, really important for you to actually sit down and journal yourself, like manually. I think it's really important to ask yourself trigger questions every day. Like before you enter a trade, it's the questions I would ask myself is, what am I seeing? What's my analysis? What do I want to see price do before I consider an entry? Before I consider taking a setup? Where are my key levels, right? So those are the questions I ask myself before entering a trade. And I like documenting my answers to them. And then when I'm entering a trade or a setup's lining up, I'll ask myself, why am I entering this trade? Where's my stop loss? Where's my TP? Why are my TP and stop loss there? What's the reason? Because that way I can identify whether I'm setting a TP with regards to where price action or where market structure's at, or what profits I want. So sometimes you'll catch yourself setting a TP where, I want $1,000 from this trade, so I'm going to set it here, when really it doesn't make sense. What the setup's actually giving you is a $500 profit. Do you know what I mean? So journal and document your answers to those questions when you're entering, and then whilst the trade is running and you're managing it, document your answers in a trade journal to, how do I feel whilst I'm in this trade? At what stage am I going to move my stop loss to break even? And then once you've closed the position, go back into your journal and document, how do I feel now that position's closed? Did I do what I said I was going to do? Did I let it run in full to either my stop loss or my TP? Which of my rules did I follow and which of my rules did I not? And most importantly, how would I score my performance on this trade out of 10? right? So that's kind of the aspect of a manual journal that you don't quite get in automated journals. TradeSeller has a lot of amazing features where if you go in, you can add all of these notes and you can review all of these trades, and you can do that, which is really good. So I recommend using that and like adding in the manual aspect of journaling, because that's how you're going to identify patterns. If you're just collecting your stats and all you're collecting is how much you win or lose per trade, you're missing the emotional and the psychological aspect of journaling, which is identifying patterns that need correcting. So by journaling in detail manually like that, you're going to identify, oh, there was 4 losses last week that I took, and all 4 of them I closed too soon, right? I made a mistake. Maybe I didn't let the trade play out. Maybe you enter a trade, it goes into drawdown a little bit, you panic and close, right? But all 4 of those trades would have been winners if you just left it alone. Now, that's what manual journaling helps you to identify as your blind spots. Because once you have that in front of you in your own writing, it's going to make you think twice next time that situation comes around. Just say you enter a trade, it goes in a little bit drawdown, your brain tells you close it quick before it turns into a bigger loss, right? But then you're going to remember what you've documented and reviewed in your trade journal, and it's going to make you think twice and realize, actually, my statistics show, my journaling shows that in times like these, if I just leave the trade alone, it's likely to result in a win, right? So as great as automated trade journals are, I really recommend taking the time to manually journal. And if your excuse for not keeping a manual journal or adding manual notes in TradeSeller, if your excuse is I don't have time, I hate that excuse. I promise you, just taking the time to manually journal your trades and your emotions now is going to save you so much time in the future, and it's going to save you so much money in the future, because you're going to correct a lot of bad habits a lot faster, right? So saving yourself by giving up maybe 10 or 15 minutes a day or even 1 hour a week to do that work now is going to save you years of struggle and trying to figure it out and break even trading, right? You can end the struggle a lot faster by doing this type of work. You're not going to end it completely, but you can reach profitability a lot faster by doing this stuff. So you just need to ask yourself, how bad do you want this? How bad do you want success in trading? If you're not willing to sit down for 10 minutes at the end of your trading day and journal your trades and review your decisions from that day, then you don't want it bad enough. This work around journaling and reflection is so important. So I highly recommend doing all that. KV said, what's your view on gold right now? So obviously bearish. I would love to see price come down to 4,400 and take out those previous lows. I'm not in any trades right now because I can't have too many tabs open. I've got 2 tabs open and that's it. I am probably going to trade my 5 Tradeify accounts and look for sales after the stream. We have a really nice wick rejection off London Open there. It could be that price wants to push down to either previous days New York Open at or else these previous lows here. So it does look like selling pressure is stronger than buying. I would definitely be leaning more on sales today, 100%. So yeah, that's what I'd be looking for today. Nice. Movie Clip said caught 100 points down. Did you? Was it this leg here? 100 points? Do you mean 100 pips? Okay. Anyway, congratulations on catching the drop. Amazing. NQ Skrilla said, we are blessed with Tradeify. Yes, we are. Honestly, the best prop firm I've ever experienced trading with. when it comes to requesting payout, like how fast payouts are approved and processed is insane. Like, as you guys know, I've been trading prop firms for 6 years. Never have I had an experience as painless as I have with Tradeify. Unreal. 000566, strange username. Personal versus prop firms. Prop firms 100%. There's no need to trade personal capital when you have a Tradeify account. You don't need to. When you trade personal capital, first of all, your emotions are much more heightened because you're risking your own money from your own pocket, right? So every loss feels personal, and also you have less wiggle room because you're likely going to be trading a much smaller account, right? With prop firms, it gives you that real raw trading experience of what I mentioned at the start of the stream with that risk tolerance or your financial thermostat, trying to find that threshold. You're not going to be able to find that threshold of what you're comfortable risking if you're risking like $5 per trade on a personal account. Whereas you can really start to grow that tolerance with Tradeify with bigger accounts, right? Because you can start by risking $100 per trade, then $200, then $300. You have more room to play with risk and to test yourself and find your threshold and your tolerance. And also, a loss doesn't feel personal, right? Because if you're trading a small personal account and you take a big hit, not a big hit, but like you take a hefty hit, your account's gone, right? Because you're not trading with much capital. When you're trading with prop firms, you have room to take a decent sized loss and still have a lot of remaining risk, right? So prop firms 100%. I wish I found prop firms when I started my journey. Took me a few years. Andrea said, okay, now the real important question for you, Claudia. How is paddle trading going? Blah, blah. Good. I went and played 2 days ago, and I actually feel like I'm starting to understand the rules now. I had my first hit off the glass, which felt good. I hadn't quite figured out how to hit off the glass until 2 days ago. And I've also found a coach, so I'm going to start getting coached. But yeah, it's so cool that you guys are following along now with this paddle tournament. I am determined to win. I'm determined to beat Nick, and I know Selena is too, so coaching is definitely required. Cam said people have skewed expectations of how long it takes to become consistently profitable. I agree. It's not anyone, as a new trader, it's not really their fault though. It's because that's kind of the story that's portrayed online, right? If you think about it, traders who are selling courses, mentorship, education, right? Selling something, it's not attractive, it's not good marketing for them to say, learn my strategy, study my what I have to teach, and you can make money in 4 years from now, right? Nobody's going to buy that course because the truth isn't attractive in trading, right? But courses or marketing, they say like learn this strategy and get your first payout in 2 weeks, or get your first funded account in 2 weeks. That sells, right? People are more likely to buy that course. So it's the marketing side of the trading industry that creates those skewed expectations. So yeah, it is true. A lot of people come into this with the wrong expectations on how long and difficult the journey actually is and the work and the transformation that it requires. But it is the message that's portrayed on social media, to be fair. The industry can be a bit messed up sometimes. That's why it's so important to have a community of like-minded people, like all you guys in the chat, everyone in the Discord. It's so important to be surrounded with people that are on the same journey as you. So yeah, amazing. PB5870 said, hey, the boss of Tradeify wants me to let you know to give each person here in the chat 150k lightning funded. Yeah, nice try. I think if I'd done that, I would never be invited back onto the stream again. Okay. So Shalmozer said, hi, what about the 10-second rule implemented in Tradeify? Is it on eval, funder, or both? I think it's on both. I assume it's on both. I'm not 100% sure. It's not a rule that's ever affected me. I believe it's like a certain percentage of your profits can't be from trades that have been held for under 10 seconds. That's an extremely fair rule. Like 10 seconds, come on guys, you should be holding your trades for longer than 10 seconds. Not all of them, obviously. There's many times where I'll like enter a trade, be like, actually I shouldn't be in this. This was against my rules, and I'll close it out straight away. So that, or maybe you enter the wrong contract size by accident and you need to close it and correct it. So yeah, like the rule isn't about all your trades needing to be open for longer than 10 seconds. It's just for your winning trades. Like you can't make a high percentage of your profits from trades under 10 seconds. It's an extremely fair rule. And if that's affecting you, you just need to like, again, assess your strategy, figure out how to implement some different rules to hold your trades for a little bit longer. But that's an extremely fair and reasonable rule. Let's see. Let's see any other questions here. Chris Stevens asked, what is the best sizing for different account sizes? If you have time, go back and rewind the stream, and once we're finished, and find where I was chatting about risk tolerance. What you should be risking per account isn't completely dependent on your account size. It's also dependent on what you're comfortable with risking, your win rate, and your average risk to reward. They all come into play for you to figure out how much you should be risking per trade. It is something that only you can answer yourself. There's not a set rule for everyone per account size. But my kind of, go-to would be whatever your available risk is, divide it by 10, and that gives you room for 10 consecutive losses in a row, which should be fine. If your win rate is on the lower side, then divide your overall risk or your overall loss allowance by 20 to allow you 20 consecutive losses. Only give yourself room for 10 if you're extremely comfortable with price, the pair you're trading, the session you're trading, and your strategy and what rules you need to follow. If you're still on the beginner side of your trading journey, divide your overall loss limit by 20. That'll give you loads of room to play about. So just say you have a $2,000 loss limit. That means you should be risking $100 per trade to allow yourself room for 20 consecutive losses if you're new and you want to play about and you want to test it out, and work on your strategy and your skill set. Let me see what other questions we have. Do you always move? Sophie Love. Sophie, you're coming with some really good questions. I'm grateful for you in the chat today. These are all really good. Sophie said, do you always move stop loss to break even when you're in a trade? No, not always. I do quite like setting and forgetting. I like entering a trade, making sure that stop loss is at a place that I'm comfortable, where if it gets hit, I'm comfortable with that loss. And I like to distract myself. I like to gaslight myself and pretend I'm not in a trade and go do something else, whether that's the gym, a walk, cycle, cook food, anything. I am quite a fan of setting and forgetting. So I do often just leave my stop loss where it is. That is only if it's like Asian session or London open or London lull. If it's like right smack bang in the middle of New York open or a high impact news release, I will stay at my charts and I will move my stop loss to break even, and take risk off the table, just because price is more volatile. But with Asian session, London, around those times, price moves a bit slower, so it feels a bit safer to just leave risk on. But yeah, I think, again, back test, figure out if you move your stop loss to break even for all of your trades once price reaches a certain point, what does that do to your win rate, right? Versus if you leave stop loss in the initial place for all of your trades, what does that look like for your win rate? It's so important to go and back test and collect analytics, collect stats, and play about with your strategy, because you might have a list of rules, right? But there's different variations of those rules. That some are going to give you a much lower win rate, some are going to give you a much higher win rate. So just say you have 5 rules for how to enter, exit, and manage a trade, right? What does that look like? What does that strategy look like if you skip Mondays, right? If you don't trade Mondays, or if you skip the first day of the month, the 1st of June, etc., where price is more playing around the monthly open? What does that look like if you only trade London session? What does that look like if you only trade New York session? What does that look like if you shoot for a 1 to 2 risk to reward instead of 1 to 3? What does that look like if you move your stop loss to break even, if I haven't already said that? So it's not just a matter of having like a set of 4 or 5 rules on how to enter a trade and how to get out. You need to play about through back testing and figure out how to maximize that list of rules and increase your win rate. So yeah, again, these sorts of things you can't learn from a mentor. You can be guided, you can get guidance from mentors, and you can replicate other people's strategies and their systems, but it's what works for you, right? And yeah, I can't recommend enough. Back test, play about, figure out, okay, from my analytics, it says that I take most of my losses on Mondays, so I'm not going to trade Mondays anymore. That immediately is going to increase your win rate, right? And I think the biggest part of the journey is just continuing to play about with your strategy that way until you find one that you're really happy with, and you can implement it consistently. So no, I don't always move my stop loss to break even. And if you're considering implementing that into your strategy, have a back test and figure out if it's good for your strategy or not. KV said, isn't that too much work documenting so many things? It's more work trading for 10 years and making no money. It's more work going through the struggle of trading for a long period of time without seeing a breakthrough. In my eyes, that doing the work, documenting those things, is the fastest way to success in trading. Not everyone needs to do that journey. Not everyone needs to put in all of that work. Maybe some people are just like, I don't know, naturally able to just win. Not me. I've had to reprogram my brain and try to force myself to build better habits, and I do require the extra work, but I recommend it so much. Like, I would say as a trader, 10%, 20% of your time is actually being in trades. The rest of the time is looking for trades, marking up the charts, analyzing price action, figuring out what you want to see before you enter a trade. And then that's in the actual trading side of things. Then there's the back testing, the journaling, doing your pre-market analysis, your hypothetical situations. And then there's reviewing your trade journal, going through your stats of your trading results, figuring out what needs to change, how to increase your win rate. There's so much work to do outside of being in actual trades, and that all of that work is what's going to make you become a better trader. I promise you. If you want this badly, just log in, journal, backtest, read books, learn, watch podcasts, tune into these streams every day. You'll get there much faster if you just lock in on all of this stuff, I promise. Let's see, any other questions? Siwa said, single best stream I've had the privilege to attend perhaps ever. Thank you, that's really sweet. I was actually very nervous about today. This is my first ever solo stream, but you guys have been great in the chat. You have made it very enjoyable and have taken the stress out of it. So thank you for everyone who's been chatting away and asking questions. Legacy Lamb said, didn't even need a giveaway this session. The psychology was more than enough. Amazing. I'm so glad you guys are getting value from this. Going through the struggle of trading is really shit at the time, but one of the things I've always told myself to help me look at it in a more positive way is I'm experiencing this now. It's not easy, it's tough, but one day I'll be able to use my experience and help other people with it. So if you're in the thick of it now, just use that as a reminder that it will put you in a position and make you qualified to help other people through the same struggle in the future. So that's something that's helped me to get through the other side when I go through losing streaks and whatnot. Let's see, any other questions? RIOS says, what does your journal look like? I just use Google Docs. I have like a template. I also use Notion actually. I have a template in there too, and then I have TradeSeller. I would love to tell you that I use all three every day. I don't. I tend to just gravitate towards one for a few weeks and then move to another and then move to another. If I done all three every single day, it would be extremely time consuming. And I know I said I hate that excuse, but I think it's important that you're at least documenting your trades, your thoughts and your emotions somewhere, right? Somewhere that you can review at the end of the week. Get those key takeaways. Yeah, it doesn't matter where you journal your trades, it just matters that you do it. And most importantly, that you review it, because that's how you're going to find patterns. Sleepwalker said, are you from England? No, I'm from Ireland, but I do live in England now. Robot, have you journaled your paddle training? No, but I should. I should. Jameer said, are you going to stream the match? Yeah, I think we are. I think we're going to live stream the paddle match. I believe it's going to take place around November, end of November, I want to say. But yeah, it's going to be live streamed. You guys will be able to watch. Uncle Morn said, this is a great stream, love the Q&A, but where on YouTube can I learn more about the strategy you explained that you're using? I have a bunch of videos that I have locked away on my laptop that I do plan on sharing to YouTube. I have like 200 hours worth of video education of me just talking through the strategy, going through charts, looking for examples and stuff. I do plan on posting it, I promise. It's been sat in the locker for a while now. So I think I've popped a message into the chat somewhere. If you go subscribe to my YouTube channel as well as this one, I will look to start posting those videos. Honestly, they've just been sat on my laptop because I didn't think anyone would want them. But if you guys are wanting those videos, I can definitely post more education around the strategy on my YouTube channel. They're already there, I just need to hit post. Let me see. Any other questions? Just do one last question because we're hitting 10 o'clock now. Oh, sorry, I heard your microphone come on, so I thought you were coming to me. So yeah, last question. Poor Vazoni said, can you show your journal template? Today's a content day, so I'm going to make a video for you guys since you are interested in the journal. I will do a video breaking down the journal template that I have and the key questions to ask yourself before, during and after a trade. if you are interested in the benefits that I talked about of manually journaling your trades. So I will write that on my to-do list. I'll drop a video today. Let me just pop in the chat so you can go hit subscribe to my YouTube. Yeah, I'll start posting some education videos on there today. I've been sleeping on my YouTube channel, but you guys have motivated me to post more stuff on there. So yeah, I think that's us for the stream. Yeah, sorry there's no giveaway on stream today, but like I said, go to my X account. I am going to post a giveaway on there. I haven't got permission yet, but I'm going to go ahead because I don't want to leave you guys empty-handed. I know you are used to a giveaway every day on the stream. So head over to my X. I will post a giveaway now. And yeah, thank you guys for being so amazing in the chat, asking lots of really good questions and keeping me company on my first ever solo stream. I will catch up with you guys soon and make sure you're back tomorrow. Roman, are we streaming again tomorrow? Yeah. Never mind. See you guys on Monday. Nick and Celine will be back on Monday. So tune in then.